So good morning, everybody. It's going to be nice to
Morning.
catch up a little bit. We've got Ben with us from Southeast. I think everybody knows Ben at this point. We've been keeping Ben busy lately, which is good for everybody. It's a great sign for both sides. Um, Lots happening with mortgages right now. Don't know if you guys have been taking a close look at rates. Got some other questions that I think will be helpful to bring up. But we want to do this with Ben about once a month. He's a great partner. Southeast is a great partner. They take really good care of us and they allow us the opportunity to reach out to a lot of folks on a regular basis. And we want to take the opportunity to see what's going on in his world so we understand it a little bit. You know, our job is to make the introduction, do the handoff, help them understand why Ben's a great partner and we'll take care of them. And we want to stay in our lane, but it's also good to know just enough to be dangerous, right? You know, so we're not completely ignorant to what's going on in the lending side of the business. So Ben, why don't you I'll pass it over to you. Kind of let us know what's going on since we've last spoke and where you see things headed.
Yeah, good morning, everybody.
Morning.
Always glad to be here with you guys on your meetings. Um, I think there's a lot of optimism right now in the markets. To be honest with you, we're having a lot of information that's been disclosed about rates coming down in the very near future, and I think you may even see a cut in September. Um, Definitely, depending upon what happens in November, you will definitely see how aggressive or not aggressive that they're going to be as far as reductions in 2025. But everything is pointing to hitting some of those marks of getting things back down in the low sixes or even high fives. If that happens, even in the low sixes, it'll open the floodgates. It really, really will. A lot of people that have been riding on the fence, waiting for rates to go down, will
Yep.
get reinvigorated and excited again. And you're just going to see them come out of the woodwork. Even though those things are on the horizon, and by the way, they're talking about it right around a 200 basis point reduction in total by the time all the cuts are factored in. It's not going to happen all at once. It's going to be a progression. But I mean, any type of progression downward is obviously a welcome sight. Um,
Ben, real
well,
quick, tell us about basis points for the layman.
So for example, 200 basis points is 2%. So 2% reduction off of the Fed rate
Wow.
is kind of where it could lead to. In which case, again, if like rates right now are 7.25, I'm just giving an example. Okay, if it's 7.25, that would lead them down to right around um, somewhere in the neighborhood of like 5.75, 6 1/8, 6.25, right in those ranges. I can't tell you exactly where it's going to target, where it's going to hit, but it should be a pretty sweet 2025 in regards to rates for us too, because of refinance opportunities. Obviously, a lot of folks that we've done loans for have gotten loans in the 7.5 range, 7.6, stuff like that, and they're really going to be able to benefit initially as well. Um, but the big thing to keep in mind is this: even though it's a projection, right, that rates are going to fall, it doesn't mean it's a guarantee. Especially with the uncertainty going on right now, we don't know for sure, but I expect it to happen, and I'm actually pretty optimistic that it's going to this time. You can ask Doug, I'm usually a pessimist a bit when they release information saying they're going to be doing something. I'm like, man, I don't trust it because I haven't seen any action and any information to lead me to believe that this would be the case, that it's actually going to happen. In this case, I really think it will.
Well, for good reason too, right? Because we heard that in the fourth quarter of last year, or the third quarter of last year, that there were going to be several drops this year, and then they revised it, and we went from what 3 to 5 to 1 or 0, basically.
Right, right. They've done none this year so far, and it was supposed to be at least 4 to 6, to Doug's
Yeah.
point. So it's like, I'm cautiously optimistic, but I want to say this. I think it's important. Even though rates they are projected to be dropping, doesn't mean they always will. But don't let people ride on the fence as a result of that. Let them know that once rates drop, everybody and their mother and their brother and their cousin
Yep.
is going to be coming out
Yep.
of the woodwork to buy a house. So it's really important to go ahead and get the house now. You're going to pay less for it on the short term
Yep.
by the overall price of the house, but also too, when we refinance you later on, you'll save money on the interest rate. So now is definitely still the time to buy. It isn't a wait, till rates drop thing, because then you're gonna be waiting for everybody on this call to be interested in buying a house, right? Like everybody's gonna be going after it.
So Ben,
Um,
that's a great point and a good segue. So let's talk about maybe how you can help us with scripting that a little bit, because of course we've told people, look, we know that for certain when rates go down, home prices go up because money is cheaper and more people get involved. So I think we know how to articulate that, and I think that we've been doing that. My thing is, okay, how do we articulate to people who have maybe closed recently, like, what can I do? How long do I need to wait to refinance?
Yeah.
And then I got a follow up after that for new construction.
Question.
So the refinance aspect of it, we just ask that they make 6 mortgage payments. Okay, that's all we ask. If they did refinance between that period of time, they could do it, but it would be what's called an EPO for us. So all of our compensation gets recaptured, and they take it out of my next check. I always tell folks, please, if you're going to sell your house within 6 months, or if you're going to pay it off, use someone else for the loan. And I mean that with all due respect, right? Like I want business, but it doesn't mean no good to do your loan and then you turn around and refi or sell it immediately. It doesn't do me any good. I end up getting recaptured. So 6 mortgage payments they make. We are actually we are waiving our lender fee. Pardon me for the stuff for my. It was a long evening. We had Luke's swim team and all that good stuff last night for like 4 hours. What's going to end up happening with where was I at, Doug? I'm sorry.
Nothing. We're just talking about, hey, and I think I want to say it's completely fair for Ben to be transparent about this, as anybody should be. They deserve to be compensated for their work. So it's completely fair to let people know, hey, look, if you refinance within 6 months, I don't get paid. Right. I'm doing double the work for half the pay. So it's fair to tell them that so they can plan accordingly. So if you've got people coming back who maybe closed at a 7.5 in March or whatever, and they come to you first, help make sure you articulate that to them. And then you can, turn them on to Ben. Of course, if they used another lender, then that's a different conversation.
Right. Thank you, Doug, for getting me back on track. Basically with the EPOs, we just try to avoid them. However, they are eligible to refinance immediately. There's no prepayment penalty, nothing that we put on our loans that would stop them from doing that. It's a professional courtesy that I always ask all my clients to please, give us that courtesy of at least making 6 payments, and we'll take great care of you. But we are waiving our lender fee for all those refinance transactions in the future. So that's a nice incentive for folks, not only to save money on their monthly payment, but also on their overall closing costs. But I mean, the way to articulate buying now is just, again, there's a massive amount of people that are riding on the fence. I mean, I've got plenty of them in my system right now that are hanging tight, waiting. And when it does hit, the floodgates are going to open. So definitely a sense of urgency, I guess, is a good way to put it, instilling a sense of urgency in our folks to move forward now, as opposed to later on when they're going to pay more for the house, which is just a fact. I mean, we're not telling them anything that's incorrect. It is 100% factual that will happen.
So a follow up to that, because, 2-3 years ago, people wanted to lock as soon as possible because rates were low and we were afraid they were going to go up. Now you've got folks who maybe they don't want to lock because a month from now, maybe the rate's 10% less, or, 0.1% or 0.2% less. So how do we have that conversation with folks? When do you typically lock? Is it usually as soon as possible? How late can you lock? And a follow-up to that question is, how about new construction?
Well, I like to
lock. It's not going to be done until March of next year.
I always like to lock loans as soon as we get a contract in, just because it's always easier to have a. Oh, hey, Luke. Luke is
what's up, Luke?
In here.
Thanks for getting with us.
Well, Luke's actually going to take over right now, guys.
Nice.
No, I'm losing my train of thought, Doug. I'm sorry.
That's okay.
What was your? Give me your question again.
The first question was, when do you typically lock? We're talking just a regular 30-day close.
So I like to lock initially, and the reason for that is it's always easier to have a conversation about someone's rate going down that is going up after the time of disclosure. Doesn't mean I always lock immediately. Sometimes I'll float for a day or two because I see economic and market data that's trickling in that shows that rates, we might get a little bit of love on like a Wednesday or Thursday or Friday. Sometimes later in the week, they give us a little bit of love as far as on the 10-year treasury and stuff like that, which does directly drive and indicate where mortgage rates are going to end up, the 10-year T-bill. but I like to lock them immediately. Now on an extended contract for a guy that's got a house that's closing in March, as an example, on new construction, we're not going to lock that until February, something like
Okay.
that. There's no sense in it. Plus, too, with the news, with the economic data, also the market data with interest rates, we don't want to lock right now anyway.
Right.
And you're going to pay a lot more to have to do it. It doesn't make any sense, because if rates are going to go down, why would I want to lock now when I can look at something in February after those things have maybe started to take place?
And I've heard that some places will do a float down too, but I guess you don't need to do a float down if you're willing, if you can just wait.
Well, we are doing we actually do a free float down option, Doug. You may have heard that from me. So what
Okay.
basically it's like this: when I get a contract in, it's like with Connor's folks a couple days ago. Went ahead and locked them in because it was a good day to lock. That was actually it was a really good day to do it. So I locked it in, but I also explained to them that we do have a free float down option, whereas up to 7 days before closing, if rates are better, we can renegotiate with our lock desk one time to lower
One
the
time.
interest rate. So when we do lock, we're guaranteeing that the rate's not going to be higher than where we lock it at, right? They're
You're not
good
going to bump it
there.
up.
Yeah, you got a ceiling, but you don't have a floor, because it can
Mhm,
go
mhm.
down. It can go down with the free float down option. So just keep that in mind too. It's something I tell all of our folks. And I mean, do we get to use it a lot? Not generally, because it doesn't take a huge swing in 30 days, but it's a great thing to have in the event that we can take advantage of it.
Well, it's a peace of mind for folks too, right? Especially in an environment which we're approaching now, which everybody's like, well, we've seen them come down from where they were. I think we're lowest now than we've been since first quarter of the year, which is a
Right.
good sign. And hopefully they'll continue to inch down. So to be able to tell folks, hey, look, Ben can float you down one time up to 7 days before closing. So if something happens in the next 3 to 4 weeks, depending on what your closing day is, hey, you're covered. You're going to get the best rate possible.
Mhm.
Right. And go ahead. Well, I thought Mark was saying something. I'm sorry.
I did want to ask a question. Like, if you do have the conversation with that, people say, yeah, we're waiting. We'd rather wait for the rates to drop, and you convince them actually you're going to have all this competition. It's better to go now. They agree with you. The next part of that question, then they're asking, okay, when, obviously 6 months later would be the first time they could refinance. But how would I advise them? It's not only the rates they're watching, is it a length of time, or is it just the rates? I mean, anything post that 6 months, what would be their key to say, yep, now's our time to refinance?
Well, if they close with us, I'll be their key, because I'm going to be calling them saying, hey guys,
Okay.
here's what's happening market wise. Here's where things are at. Now, what I don't want to do is call people too early. What I'm probably going to do to counter the other companies that'll be calling, vulturing on our database, is to say, hey guys, listen, you're going to get a lot of calls from lenders right now about rates dropping. Don't fall for the first thing. Okay. Let's see how far this thing goes. Cause I don't want to refinance. I mean, selfishly, I'd love to 2 or 3 times, right? Like, I get paid more
Right.
doing that, but it's not right by the client. So I don't want to do that. Right. What I want to do is educate them to say, hey, listen, just because it dropped a half point doesn't mean you want to refinance right now, because it should continue to go further. And therefore, why pay double closing costs? Why do this 2 or 3 times? Right.
Right.
Let's find the floor. So that's the thing. Like, I'm there to help educate them. And obviously too, I want them to call me if they have questions. I want to be top of mind for them to call and say, hey, is it time to refinance, Ben? I'm getting calls from other people. So,
Right.
I think we do a pretty good job of retention with that for the most part. I generally have a pretty good relationship with my database.
Well,
That's great.
one conversation, and thanks for that question, Mark. That was a good one, and Ben for the answer. One thing that I talk to my folks about, because rates are high now, comparatively speaking, historically speaking, over the last decade or whatever. But people are looking because they want the best rate, and what I tell them is, well, it's not always about the rate. So make sure that you're comparing apples to apples, right? How is another lender arriving at that rate? Are you aware how many points you're purchasing or something like that? How much money are you having to bring to the table to get to that rate? How does that equal out over, a given period of time? So make sure. Also, how long are you planning to hold the mortgage? A lot of people hold a mortgage, 3 to 5 years before they refinance, or they just sell and move and then buy something else. So you have to look at that long-term cost versus the short-term cost as well. I think that's really important. And one thing I tell people too is, like, look, if you think you have something better, take it to Ben. right? He's already put in this time for you. And I would say this about any lender that I have folks under contract with who's already invested a good amount of time with them is, look, he's already invested a lot of time in you. At the very least, give him the opportunity to see what you have in hand, make sure you're comparing apples to apples, see if he can do better. He wants you to get the best rate. He's got this float down option, but he has to know what you got to be able to give you a better option if he's got one, right? So
Right, absolutely.
have respect for folks' time. And I think most people understand that, they
not
don't
for
if you
no-
don't explain it to them necessarily.
Yeah, I mean, I always ask folks too. It's like yesterday we had Doug and I got a contract in for like a 9-month closing, right? So we sent out disclosures to the gentleman. He's like, if I sign these, does it lock me into using you, this, that, and the other? And I said, well, listen, it doesn't lock you into anything. It's nothing binding. They're federal compliance, forms that we have to have signed to show that we've given you an outline of what the loan will look like. But I said, however, it is my expectation that you would give us credit for being there for you on the weekends, being there for you like we have been, Johnny on the spot with everything, that you would do business with us. That's our hope, right? So I kind of plant the seed there, like, hey, listen, if I get the builder's lender, this, that, or the other, but also who was there for you on a Saturday night? Who was there for you while I was on my boat? And who got your pre-qual letter in your hand at the same time? You know what I mean? So it's yes, why I love working on the weekends and I'm happy to do it all. At 100% happy to. We don't get everybody, but my expectation for the client is just like, hey guys, at least give me that courtesy. Like Doug's saying, let me at least lay eyes on what your offer is, see if I can match or beat it, keep me in the running. If not, a lot of times too, I mean, if I do my job good enough on the front end, maybe not with a new construction deal, because I can't help what these builders lenders are offering. Like and the builders are, builders incentives are, but like usually if I get somebody on the phone that's buying an existing home or whatever, they don't generally shop me very much. I mean, I don't have that problem because we take really good care of them in the pre-qualification status. I think it's real important though to please make sure that when we do have a client we're working with together, that they are doing their part, that they've got to sign disclosures, they've got to get us what we need when we need it. If not, we're going to have a fire alarm, fire drill, closing. And it just, I don't want that with any of you guys. Like, we all work really hard to get where we're at and to get these deals in the door. It's hard enough right now. We want to keep a good experience for everybody involved. But our clients have got to participate in that too. So we send them a do's and don'ts list. I go over expectations of that over the phone. Like we go through it ad nauseum. So just know we're working towards that to make sure they all know the expectations up front. Like, hey, we need documents typically within 48 hours of request if you want to keep things moving smoothly. If not, it can really create not necessarily a backlog, but a traffic jam, if you will, trying to get things through. And plus operations looks at it like, well, these people took their sweet time for 2.5 weeks and now all of a sudden we're supposed to just go crazy, right? To get it closed. I mean, there's something to be said for that too. It's all about trying to create a good experience for the client. And they have to do their part though. They've got to help us out with that too.
And I've asked Ben, to make sure that he lets all of us know as well when we need to help push that along a little bit to make sure people haven't forgotten. And also that they're expecting, hey, this doesn't just end when you fill out the loan application and you get a pre-approval letter. That's not the end of this. We're really going to get started after we get under contract. So you have to make sure you're responsive to your lender, that you're filling out all of the documents that they're requesting in a very timely manner if you want to be able to close on time.
And generally what I'll do is let you guys know too, if we've got a client that's been kind of a problem with it or something. Michaela did a great job trying to get her client back engaged. She got every excuse in the world about graduations and this and that. Guys, it takes like 2 seconds to e-sign those disclosures. Like if somebody's telling you they can't check their email, that's just, I mean, I don't understand, but I mean, you're buying a house, right? Like it's an important investment. But Michaela did a great job of rounding those folks up and dealing with a kind of a wily listing agent on it as well. So, but anyhow, we've had some great accomplishments with you guys so far. We've got a lot under contract. Definitely, please keep throwing us some bones here. If you guys have anybody that you need me to talk to, I'll stop what I'm doing and get on the phone and do it. Connor did a great job getting the Karrases under contract. Man, that was great. They're really awesome people and very excited. I think their appraisal's being done today, Connor, at 11 o'clock. So we'll have it back in due date by the 25th. Yeah, we'll keep our fingers crossed. We've got a good appraisal panel too, guys, of folks locally, that help us out here. So, we were kind of able to handpick them per se. And if you guys have some good appraisers that you like in the Wake County market or any other markets you guys are in, please let us know and we'll be happy to add them to our panel. Okay.
Ben, question for you.
Yes, ma'am.
Speaking of getting our people kind of ready to have documents ready for you, do you have like a list or something you could send out to us? So when
Sure.
we first start talking to people, we can say like, hey, you're going to need pay stubs for 2 weeks. You're going to need your W-2. You're going to need a letter from your boss or
Sure.
anything like that. So they're prepared by the time they get to you to not waste time once they go under contract.
Sure, sure. I'll be happy to send you over a list for it's kind of different for self-employed and then for W-2 employees. Self-employed is a little bit more extensive as far as the background that we look at. Like we look at we average 2 years of tax returns in most cases. There's a couple products we can only average that we can only use 1 year if it looks better for us. So yeah, I can get you those sent out. I'll have my assistant Beverly draw those up for you. And we'll get those out to you today to so you have kind of a template. But what we do when I do the pre-qualification, guys, I go ahead and ask them to upload some of that stuff. If they don't have it handy and their credit score is 800, typically they're not BSing when they put in how much money they make. You know what I mean? Like, unless it's self-employed and they just don't know any better. I never issue a pre-qualification on a self-employed borrower without averaging tax returns, ever. And I never will. I don't care if they need to make the offer today. We're not going to do that because that can put you guys in a lurch. It puts the borrower in a lurch because people write off everything. You know what I mean? Like they really do, and they may not know it, and they think they make this much money, but when it comes down to the calculations that we use on the Fannie Mae and Freddie Mac self-employment worksheet, it doesn't come out that way. So we definitely make sure with self-employed borrowers, we're very, very ultra cautious in making sure we have everything we need before issuing the pre-approval. But like most times, if you have a W-2 client and their 800 credit score borrower or 760, whatever the case may be, low DTI, like I'm not going to aggravate them for a pay stub or hold up their offer for a pay stub. You know what I mean? Because I know that like obviously they kind of know their situation and seem like they know what they're doing. But I typically like to have them in hand. So as soon as we get them pre-qualified and run them through the automated underwriting system, that's when Beverly, my assistant, Beverly Boone, she'll send out the needs list that Connor's referencing. That'll show a list of all the stuff we need from them for underwriting. But we'll go ahead and get that over to you, Connor, so you can kind of give people maybe like a little bit of homework to do or whatever.
Yeah, I think that's great. We also have that sheet that April gave to us from Ben that has kind of the information about each of the different loan types and kind of some of the requirements to go along with that too. I don't think I've added that to dot loop templates yet, but I'll get it in there so you've got that as a frame of reference point too. And Ben, if you get that other stuff and pull together, send to me. I'll disseminate it to everybody and I can add it in with that information.
That's fine. I'll get with Beverly today and just have her send me a kind of a breakdown. It won't be on that nice little flyer or anything, Connor. We don't have it like on a flyer. Is that okay? You just want like the information though? Okay, cool. If not, I can have marketing make you one. It's not a big deal.
No, just something for us. So that way, like last night I was speaking with somebody who's not buying until spring. So that way like, hey, if your credit's not great, these are the things you would need to get together or like,
right.
You know, just.
I think I didn't mean to interrupt. I think what I sent over was more like the loan products, just kind of a list of everything. Yeah.
So
which is a great tool too.
If we have somebody that maybe says their credit has a few bumps in the road right now, Connor, and they're not ready to buy yet because they're working on credit, it's still never a bad idea to get them over to us just so we can analyze it and tell them exactly what they need to do. Because not every credit restoration company is going to tell them what they need to do in the appropriate way. And neither is their own judgment. Like we know how to, we have different tools and things we can use, credit wayfinder, what if credit score simulator, things like that we can actually plug into the system there for them and give them precise calculations on what they need to do and the results estimated based on them performing those actions. So it's really it doesn't cost them anything to do it either, but it also gets our client in the mode of actually completing those tasks, right? Because like, okay, yeah, Ben's talked to him. He's got him a game plan. Now they're executing said game plan instead of waiting around for it and having to do it when they want to buy and make an offer and they can't. You know what I mean? So
they have direction. It's like a to-do list. And I think based on my experience, if somebody mentions they're working with credit repair, tell them to stop and talk to the lender. Because most people do not use those things. They're paying for something when they should be, if anything, they should be using that money to pay down their debt that they've got. And to Ben's point, and I've heard many lenders, especially Ben, say this, what you think you need to pay off is not always what you need to pay off.
Right.
And that's why they need to talk to Ben instead of just assuming, hey, I should pay this off or I should listen to this credit repair company. Talk to the lender. It gives them the opportunity to get in front of them, help them set a plan, earn their business, and actually do what they need to do to get qualified versus somebody else making a buck off of them.
And you see who the ones that are willing to do the work, they get the results. Like there's some of them will get off your plate because they're full of it. They're not looking to do anything, right? So you kind of eliminate that off your plate too. You can focus on the next lead or opportunity, I should say.
That's a great point. It's a test close, just like signing agency, right? Just like talking to a lender. That's a test close, which, hey, we're in the business of helping people take the next step. I'm here to help anybody, but you got to meet me halfway, right? So make sure you're doing your part to meet them halfway and show them where they got to take the next step. Great discussion. Anybody else have any other questions for Ben?
I kind of do. I don't know if it's really one for the meeting. It might just be something that he could send me email or we have a separate conversation. But I'm working with a teacher right now and a North Carolina teacher in the school. And she's just asked me if there's any options that she has with mortgage, deals, Homes for Heroes. She mentioned, I started looking into it this morning and it felt like I wasn't quite getting all what there was being said and not able to really follow that. So yeah, my question is, what options do teachers have to this? Is there anything that they can use to make it, a more attractive product for them?
Homes for Heroes is just basically going to, first of all, if you're a real estate agent and you're signed up on it, you give 25% of your commission back to the client. So keep that in mind. That's why you see them holding up those checks and all that. The lender typically will put up like $500 to $1,000 off closing costs or appraisal or something like that. But you have to pay Homes for Heroes a certain amount each month to even be a part of that program.
I've looked into it. That's true.
Yeah, and it's, I've done it before. I think right now we all work really, really hard to be giving back 25% of anything, to be honest with you. That's my own personal opinion. Not saying it's not worth it. If you were going to do something like that, you would definitely want to target fire stations, hospitals. Like you have to have a game plan for doing that. Lenders and realtors can link together through that program, but like, honestly, Mark, the thing is most teachers are going to qualify for one of the big five. Most first responders, that's FHA, conventional, USDA, jumbo, not so much, but you've got, I call them the big five: USDA, conventional, FHA, VA, and jumbo. But like there's no like niche product out there that I would just say, hey, you're a teacher, here's what you need to be doing.
Right. But just put her in touch with you, have a chat really is the best way to start, I guess.
It absolutely is having that conversation. But most of those folks are a lot of times are going to go FHA because the low down payment, or USDA if they fall into that bracket with the debt to income, things like that. But there's really not some magical, shiny object for them. And plus too, to be honest, like down payment assistance programs, I don't do a lot of those at all. Their 60-day closings are a nightmare. Then there's better products out there that people qualify for without having to go through that. And you'd be surprised when you don't allow that to be the number one option, how many folks are able to get a gift from a relative, for down payment, things like that. Like it's interesting how that comes about. They're able to come up with some money, things like that. So,
right.
Yeah, but Homes for Heroes is cool. It's just, I don't know. I stay on the platform for about like probably a year and I got off of it. I just didn't.
Okay.
I can do a loan for them without having to be a part of that and paying Homes for Heroes as an organization.
Right. Yeah, that does sound a bit. Yeah.
Yeah.
It's pay for play like a lot of places.
Right.
Hey Ben, this is Ellen. I have a question, just general.
Yes, ma'am.
But it could help other folks. I have a customer who is currently great credit score, makes about 170 household income, and they're looking at a house, but she is about to take a new job. And she has been interviewed. She knows she's going to get the offer letter, but she really wants to make an offer on a house. What happens in that? Like, it isn't, my understanding is it wouldn't be that big of a deal if she's offer is going to be higher and she's just going from one job to the next. Or should I advise her to wait?
So I mean, is it the same city and everything? Like there's no like
Same,
moving.
same city, same industry, just a
Okay.
promotion and a different company.
So here's what I would say. If she qualifies with the income she makes currently at her existing job, sit
Right.
tight, sit tight. If you don't have to leave, right? But if you want the other job, which it sounds like she does,
Which
then
she
we would need
does, yeah.
then we would need to get the signed offer letter that has absolutely no contingencies on it. So all drug testing is done, all contingencies are met, and also has to have a clear start date with the salary mapped out of how much they'll be making, and she has to start. Okay, so it could be day one. We just need to make sure that she started. All right, we don't have to wait for a pay stub, but we have to make sure that she has started
before closing.
Yeah.
Okay.
Or like the day of, or like it could be like the
Mm-hmm.
day of, or what? I mean, well, I say day of, typically the day after, because we do have to get them to give us a verbal. The employer does, But yeah, but with that, I mean, you can't just go off the offer letter anymore. They have to actually start, because so many people are getting that and then not starting their job, and then you have a post-closing nightmare. You've qualified somebody off of the wrong job or no income in some cases. It was being manipulated quite a bit.
Okay, well, that's new information. I mean, I ran into a situation where, and this is, definitely a learning lesson on all parties, where I had people relocating. The wife got the job. She started the job. She was here. The employer was told, or the husband was told, that he was going to be able to transfer. And so the last thing that we needed before closing was his sign off from his guy. So he reached out to HR. Well, while we were in that whole process, his company got bought out by corporate, and there was a new point of contact, and that point of contact said, sorry, but no, you can't work remotely in North Carolina. So the whole deal fell apart. Wow. And they lost the house, and it was just a whole thing. So I'm advising clients now moving forward, like, you better make sure you at least have an offer letter to that lender before you submit an offer, because you can jeopardize your ability to close on a house if you don't. So now it's not just an offer letter, we need an offer letter showing, I mean, I know what I know that they ask for start date and all that kind of stuff, but even if the start date is like a week after closing or whatever, that's not good anymore.
They want you starting. Yeah, they want you starting. I mean,
otherwise you need to be approved based on your current employment.
Yeah, and Janine, some of it can be a case by case scenario too. I mean, some of it, if it makes sense, like I can have my underwriting team take a look at it. You know what I mean? It'd be like, hey, can we try to work this out? But so many people weren't starting their jobs, or they were just using it as a catalyst and then not going, and then you get it post closing issues, man. It can be a nightmare, But yeah, the offer letter, we can start out with one that's kind of baseline and basic. But in order to get it through underwriting, it has to have no contingencies. It needs to show that all the contingencies are met, and typically they need to be started there on the job, which used to not be that hardcore about it. Perhaps maybe that'll kind of die back down a little bit as things get busier. Maybe that timeline won't be as.
That kind of runs into a situation too, then, because like most people want to be closed on their house, moved in, and then start their jobs, and so like, where are they going to be living while they start their jobs before they're closed on their house? So that can get kind of weird too, I would imagine.
Yeah, I think I haven't seen it be a big problem though for people though.
No.
To be honest, Janine, like
I have a client who had that issue right now that's under contract. She had to apply for a second home mortgage because her lender, she was going through state employees, but they wouldn't give her a loan until she started. And she was like, well, I can't start a job if I have nowhere to live.
Yeah.
Yeah.
So some folks will stay in a hotel, an Airbnb or whatever. A lot of times they're selling a house, so they have plenty of money that they're coming from to be able to do it. But they've got to start a job. You can't just say, yeah, here's the offer letter. Here's what I'm going to do. Well, we have to look at what you're actually doing. You know what I mean? It's just like if they're getting a raise to qualify, that raise needs to be like, we need a clear-cut date on when that's going to happen, some information from their employer.
I have an amazing glamper that they can stay at if they need a place to stay. Just let me know.
There you go. There you go.
But anyway, they've got Love it.
I am.
Ben, this is kind of what we went through on Monday, right? With John Gibson.
Right. John Gibson had to have.
Let's not give names. This is going to be online.
Okay.
Yeah. Well, anyways, we work. Here's the situation, guys. If we have something like that pop up, we'll work through it. Okay. We'll find a solution. That's what we'll do. we'll get it done and we'll work through it. I mean, that's all we can do. In a situation like with when that remote with the remote employee thing like you were talking about, like that's just an ugly situation. That stinks.
Bad timing.
Yeah, that stinks.
That was an asshole of an employer. He just got screwed. It was no one's fault except it just
that's a bad
it was
situation.
terrible.
Yeah, that's
It was bad.
that's a
Yeah.
bummer. That's a bummer. I mean, I
Yeah,
don't
it was-
encounter that a whole lot. Like
Yeah,
usually we
again,
have
it was
a
crazy.
pretty smooth
It was
process
a
with
one-off.
people that are it is
Yeah, it was a
for
one-off.
sure.
Yeah.
I think what
Well, it's
Ben is
better, I
saying is
guess.
this is what you should expect baseline as an expectation, best practices, but no two situations are necessarily the same. So let's have a conversation and see where we can get with it.
Yeah, we don't want to disqualify something because we hear that, right? We want to at least like let's take a look at it and see if we can dissect and find the solution, like we were talking about before. I mean, there's more than one way to skin a cat. So,
and that's what I also always tell people about Ben is, Ben is not a brick and mortar lender. I mean, he's got an office, but you guys know what I mean. He's not Wells Fargo. He's not a bank. He's got more options. He's got more investors. He's going to come a lot closer to tailoring something exactly for what works best than somebody than, a big box bank that's got 4 options. Pick one of these, right? So have the conversation, talk about what's important to you, whether it's the terms, the length, the mortgage rate, how much you have to bring to closing, your monthly payment, and then he can take all that information and give you options to choose from.
yeah, we just let's keep the pre-quals rolling in, guys. We've you all have really been it's been great. I was talking to Doug the other day. You guys are working really hard, doing a great job. And I really appreciate the opportunity to work with you guys again. We've had some really good clients that we've been able to work with so far and put in the hopper. We want to keep that momentum rolling. So we're just grateful for the opportunity over here. And again, I'm available to you guys 24/7. So, if you got something at 10, 11 o'clock at night, don't hesitate to call or text. If you got something over the weekend, I don't care what I'm doing, we're going to get it done. So
Thank you.
Well, Ben, as always, we appreciate you, man, and thanks for spending some time with us. This is helpful. Thanks for, giving us the opportunity to ask these questions to you directly so we can delve into them. Makes us better, puts us in a better position to take care of our folks. So we really appreciate it. And we'll get Ben back on here soon, okay?
thanks, guys. I appreciate you.
Oh, more babies.
Yeah.
I got all the babies. This is one twin. This is Avery.
Oh,
Janine is in heaven.
Can you say hi?
She's
Hi,
got
Avery.
babies
I am
already.
Here's the other one.
Oh, baby. Love the babies.
hey there.
Can you wave,
Aw.
Evelyn?
You're on TV.
Oh, she's waving. Say hi.
Oh, precious. I love it.
Mm.
All right. Well, I will let everybody go. Have a fantastic day. Check the group, check your email for calendar alerts that I sent out. If you hadn't picked up on those for the coming weeks, I'll be adding another one as well in the next day or two. I hope. Let me know if you have any questions, and I'm here if you need me. You guys keep rocking and rolling. Have a great day.
Thanks,
Thank
guys.
you.
Bye.
Thank you.
Bye, thanks.
Bye.
Bye.